You have been told that trading with a small account is actually a disadvantage. But what if I tell you that's completely wrong? In fact, it's the opposite. And in this video, I'm going to prove you that. I'm sure you would have seen your favorite traders flexing a 6-digit PNL, flexing their cars, flexing a lifestyle, and you're like, what's the point? I'll never be able to do that. That is the exact mindset that destroys all the beginner traders. And with this video, I'm going to help you fix that. Now, since we are talking about small account size, let's first talk about the institutional money. How do they trade? They cannot just randomly sit at a particular price and push the price in a direction that they want to, because they cannot just hit a button and move the price, because that's not how the market works. They do not have enough liquidity for us or for them to fill their bigger orders and keep the price going. So what do? Now here you can see that Bitcoin gave an extremely great push towards the upside. It's too good. I mean, you could have traded it, you could have bought Bitcoin or whatever, right? But here's the catch. Before you got this whole push towards the upside, they had to get that one final push towards the downside. They had to literally engineer that move. While they got the sweep of all the liquidity, sweep of lows or whatever you like to call it, they got that liquidity. They had to fill the bigger orders, and after that market started to go higher. So that is how it went. Now for you, it was super easy for you to get into the trade. You would have just marked the previous lows. You would have just waited for the sweep of the lows. Price re-enters into your area and you would have just went long here, and you could have held the trade for as long as you wanted to. I mean, you need to master patience, but if you could have done that, you would have literally bought Bitcoin at 70,000, 80,000, and you would be holding it till 120k. Right? I mean, that's about the strategy. I've made a lot of strategy based videos. You guys can check that out on our channel. All right. And by the time you guys do that, make sure to hit the like button and subscribe if you've not already done that. Right? So this is a major advantage that we have on them. We can just fill our orders and we can hold it for as long as the trade plays in our favor. So I just give you your first example why having a smaller account is an advantage. Now the second part, and this is just a pure fact. What makes you think if you can't handle a $100 account, you will be handling a 10,000 or a 100k account in a profitable way? I mean, it's still number, it's still account size, it's still real money. If you can't handle $100, why do you think you can handle 10,000 or 100k? I don't think so that's going to work like that. So you have to make sure that you build your psychology, you build your mindset in such a perfect way that it does not matter if you're trading with $100 or if you're trading with $10,000 or even more. What you focus on is the percentage, is the strategy, and on your rules. That's all. And I would say it does not matter what is the size of your account, because in the end, if you can follow your structure, if you can follow your strategy, that is all that you need. And that is what makes most of the traders to move from their beginner to intermediate until the advanced stage of their trading journey. This is that one particular thing that they need to master. You need to control your psychology. You need to make sure that you are not taking random trades. But we'll come to that later. Just think of it like this. The big accounts, they are like cruise ships. But your smaller account is more like a speedboat. You cannot just randomly turn a cruise ship. It will take time. It will take efforts. But for a speedboat, it's super easy to turn wherever you want to take it in a particular direction, to get a U-turn or whatever you want to do, you can do it very easily, right? You can keep on changing your decisions. Now, this flexibility can be your advantage, but can also be your biggest disadvantage. So you need to make sure everything that can turn negative, you master that and turn it into a positive side for you. Just as I said, you have flexibility with smaller accounts, but that does not mean that you are going to be over trading, right? You need to make sure you have a strategy, as I said earlier, and you just stick to that. So you are taking only planned trades and no noises. Now let me tell you, what is your edge when you are trading with a smaller account? So just as we talked about the whole liquidity thing here, that they have to engineer the liquidity, take the price there, and then get their orders filled, and then the price starts to move higher. So that is how it goes. But what are the other things that are present on the chart that we can observe and use it for our advantages? So let me tell you more about them. So we have already understood about the liquidity, right? Like how they trap you, how you get manipulated, how you take an opposite direction trade, and that is how it goes. Now the second part, and that is trading on the key levels. As I said, I have made a dedicated video about the key levels. All right, you can check the description. There will be a link about that. You can always check strategy based videos, psychology based videos, risk management videos, everything that you need as a trader. All of those videos will be present on this channel. Make sure to check out all the playlists and it will help you in many ways, right? So as I was talking about the levels, now you can be marking some of the best trading levels as we have discussed on our videos and on our live streams as well. So you can be checking them out and it will help you in many ways. So the best part is some of the most basic levels like daily high, daily low, previous day high, previous day low, previous day open, previous day close, and similarly for the weekly and the monthly level as well. Now these are some of the most basic levels, but they do have a great accuracy. They have the tendency to give you reversals, and that is exactly what you want to do. Now how do you trade them? In that specific video you'll get to see the confirmation, the whole strategy part as well. But just for your information, just so that you guys know, those levels, they are super good, they are super strong, and you can always be using them. And since we were having a discussion about the liquidity move, right here, one of the most important tools that you guys can be using is also an FRVP tool. So if I just quickly mark the FRVP tool, this is what it would look like, right? And now you could have spotted the liquidity. You could have spotted a lot of different confluence just around that area, and you can see how the price has reversed exactly from a low volume node, right? And you always expect to get a reaction where the volume is very high, where the volume is very low, because price will always fill up those areas where the volume is high or where the volume is low. So that way you could have easily spotted this bottom, you could have got into it because you had multiple confluence, you had liquidity, you had volume, you had price action, you had your levels. Combined all of them, you could have got into one of the best trades that you would have had recently in Bitcoin. But this video, it's not just about what would have been the best trades and how you could have entered them, but this is mainly about psychology. You do not have to get into every trades. That is the most simple rule. But for you, the most important thing is, even with the limited capital, if you can keep your mindset in control, even when you see a $2 worth of profit, does that impact you? Does that make you feel different? If it does, I'll tell you there's something wrong and you need to fix that, because profit or loss, your mindset should always stay stable. You cannot get extremely happy or extremely depressed on the outcomes of your trade. Now, as I was talking about the different kind of tools that you guys can be using, so some of the best tools according to me that you guys should use is FRVP, is Fibonacci, a VWAP indicator. Now all of these tools or indicators that I'm talking about are not there just to give you a buy or sell signal. That is not how it works. The reason why you will use them is because they provide you with certain kind of data, and those data will help you to form your bias, to look at a certain level where you can be looking for reversals and continuation and whatnot, right? So you need to be having them. So the very first point, the very first edge that you had was about the liquidity. The bigger accounts, they have to engineer liquidity, but for you, it's the most easiest way to get into a trade, get out of a trade, probably a 1 to 2 hour trade, and it's super easy, super convenient for us. The second part was the key levels. The institutions, they are building the liquidity, they are building the moves, but for you, it's super easy. Mark those levels, look for a reaction, look for a confirmation, and that's it. You can get into the trade. And here comes the third part, which is the execution advantage. The bigger players, the bigger accounts, they have to wait. They have to engineer the moves, as I said, right? They have to trap traders, they have to do so many things, right? I mean, in the end, it's completely worth it for them because they get paid well for it. But for you, the execution is so simple. You mark your levels, you wait for your confirmation. Let's say you see a bullish closing at a liquidity sweep of the lows. You can buy that because you saw that the price did go below the previous low. It stopped out everyone. It would have hit a lot of limit orders. It would have liquidated many traders. And after that, the price has started to move in opposite direction. So that shows that the liquidity sweep is done. Buyers are taking control, and you can get into a trade just by hitting a button. That's all that you have to do. Either place a limit order or a market order, but your orders will get filled instantly. So that is the biggest advantage, which is about the executions. Now I'll tell you, there are certain exchanges which might not let you fill your orders at once. And again, those are the problems which only traders who trade with, let's say, $5,000, $10,000 or higher per trade. I mean, I guess this is issue that they might face if their exchange or their broker is not good enough. But other than that, there is no issues with trading with a smaller size account. Now, as I was talking to you guys about different tools, one of them was obviously FRVP, right? So if I mark this FRVP tool again, what do we get to see? We had certain levels which played out super perfectly, right? Now you had this volume area high level where the price exactly bounced from. You had the high volume spikes where the market has exactly bounced from. So now you have certain levels, you have certain ideas, and that you can just instantly get in and get out and there's no issue for you. So I would say a smaller account for you is actually a blessing, because first thing, you're not blowing your account, and if you do that, you're not blowing up a bigger capital. Second thing, you're building an accuracy, you're building a mindset that will help you a lot when you're trading with a bigger capital. All right, so that was all for this particular video, guys. If you enjoyed it, make sure to hit that like button, and if you're new to this channel, make sure to hit the subscribe button as well, and I'll see you all in the next video.